Welcome back to Next Gen Investing. It's now time to discuss Palantir, as we frequently do for this segment, because the feeling of FOMO has been felt hugely from Palantir, given that it closed out the second quarter of this year, as the S&P 500's best performer. Joining us now to talk more about the latest is Marley Kayden, contributor here for the network. So we have this note from Wedbush's Dan Ives. I have to say, of all of the names in his coverage where he has been a lone bull at times, I feel like this one he's been the most right on, because he was an enthusiast years before it really gained all this hype and momentum.
He's been a fan, a longtime fan. I would say this is maybe his most bullish note yet. He uses some pop culture references that I'll tell you about that if you are a football or soccer fan, you will think are pretty potentially iconic, and the mention of a big company. So we raised the price target $160 to $160, up from $140. Of course, this is at Wedbush because this is Dan Ives, keeping his outperform rating, and he cited growing confidence in the company's AI strategy. He says that is key to his bull thesis for Palantir playing out over the next 12 to 18 months. He says that they have the path to become the next Oracle in the coming years. Not in a long-term play, in the coming years. In short term, he views Palantir could be an Oracle-style company, which is incredible. Now, oddly, despite the note, it is faltering a bit today. As I look right now, we're down less than 1%, but still in the red. It did snap a 5-day winning streak for Palantir. It appears to be there's some underlying lingering concern that Palantir is overvalued just because it has had a meteoric rise. But Dan Ives did address the potential of that, saying he thinks that bears in the hibernation cave are trying to say it's the top. He did acknowledge the valuation is expensive today, but he believes that the stock should be compared to famous football or soccer star Lionel Messi. And he says that he believes its path to $1 trillion for the Messi of AI. So a lot of big names if you're a sports fan, or if everyone in the world knows what Oracle is. I mean, he's put out some big suggestions here for Palantir. But, with a high valuation means expectations are extremely elevated for this company, despite the fact that they've had this meteoric rise. And they have had some major initiatives help them, as helping the U.S. Navy operations of late. They have their partnership with Accenture to help streamline the federal government. Their stock's up more than 85% this year. I mean, they're moving well, and they have good growth potential, but they're already really highly valued. So while Dan Ives seems to be a big fan, it does appear that some of the other analysts are maybe less enthusiastic while still bullish.
Yeah, no, and it's super interesting, and Dan Ives always has colorful descriptions. I will note, though, one of the busiest guys on Wall Street. He covers 50 companies, 46 buys, only 4 holds. So he continues to be the most bullish man on Wall Street as well.
50 companies?
50 companies.
Yeah,
he's got to be more than double the average analyst. Probably, I think most of the time they're covering around 20. So he's a busy guy. His team's busy. But here's something that really stuck out to me. Is we were making the comparison to Oracle, and 2 things. I was like, is that a good thing? I know Oracle's suddenly been really, really successful in terms of the stock price, but I think of Oracle as like a legacy, kind of slow-moving company. Like Palantir is fast. Palantir is the future. Do you really want to become the legacy company? And 2, I thought the gap between their market caps would be a lot greater than it is. It's still pretty big. Oracle's about a $660 billion company, Marley, but Palantir is 330.
Yeah, 330.
It's half the size already. I mean, think about it. Like, Palantir, no one knew what Palantir was 5-10 years ago. Everyone has known what Oracle is.
It wasn't even public 5 years ago. Less than 5 years ago.
It was a meme stock.
I feel like we talked about it forever, but it hasn't even been public for 5 years. I mean, their market cap was $12 billion. Now they're half of Oracle's size.
Yeah. $330 billion. So my favorite metric, that's 3 Starbuckses. Starbucks I always use because they're on every corner in major cities. They're scalable. When you think of successful business from where it started, its humble beginnings to where it is, like Starbucks is that story. Palantir is 3 times that in 5 years.
I mean, you want some other perspective. They are now more valuable than United Health, Coca-Cola, Wells Fargo. And these are huge businesses. Their market cap is higher.
Yeah.
And I mean, I guess that's right now the theme of like we are looking at some of the costliest companies they've ever been. Like to your point, this name trades, I believe it's a forward P like 250 times. So I know the growth has been there. So I know a lot of times we criticize based on valuations, but then like Tesla, for example, if you were arguing at that point, then you would have missed a lot of the upside because valuations can remain stretched. There's just these names that carry these lofty premiums, like Palantir, CrowdStrike are some other ones. So I know that that's even mentioned in this note, but doesn't seem to be deterring him at all away from continuing to be a pretty tried and true bull in the
Not
same.
at all, Jenny. And I have the number. This stock trades at a staggering 600 times earnings right now. That trades like a speculative, like a crypto. I mean, that doesn't trade like a standard growth stock. So
and that goes to show how fast it's growing and expected to grow too, because on the forward basis is like 240. But this is the thing that sticks out to me, because when they start getting to those kind of numbers, you're like, okay, this company is thought of as almost like how Amazon was 5-10 years ago, where it's like it's going to have a spigot to turn the earnings on. 85 times forward revenues. That is, I mean, there might not be another. I mean, this is like beyond Reddit numbers even in terms of how expensive this stock is. But there's a belief that this stock can, continue to, exponentially grow, and it has to live up to these high bars.
And certainly the analyst price target right now, average, is 89.32. So even with all their upgrades they've gotten and all of their price target increases, there is as much as a potential 35% downside risk. So there are some people who are slightly less bullish than Dan Ives is, but Palantir just continues to perform.
This is a career maker or ruiner for that space. I do not envy this. I mean, you can be Dan Ives and you just believe. And
he'll be fine because he covers 50.
But it's also
companies.
like when you're right, you are so right, and you're a rock star for it. It's why Dan Ives, the household name in financial markets. But if you're the guy who says Palantir is worth $30 because that's what your model says, and it goes from 15 to 150, and your clients aren't involved or outright, bearish these names, I mean, you're getting fired, and that's the tough part of this business. So don't envy the job.
Nope.
Yeah, don't envy that job. But this is one where I have to commend him because this was a meme stock, and I know everyone always gets mad when you call companies that. I'm not saying it still is.
Different style, but it's same crowd. Ran in the same crowd.
It did. But like the days when AMC were popping, it was like, oh, Palantir's up, part of like the
diversified portfolio of GameStop, AMC, and Palantir from Wall Street Bets.
Yes, but I guess talk about they should teach a masterclass on reshaping perception now, because now the maturation of Palantir has really come to fruition before our eyes.
I would say that's even matured yet. I mean, it's still early days.
It is, and I will say so I'm still on the meme stock. The short interest in the same has risen about 19% over the last month. That's always what I tend to check when you look at these very frothy names. But again, it's kind of that momentum where you don't want to be standing in the way of the freight train. So it's been a really great performer to watch, and I've enjoyed the ways in which it's massively improved the fundamental story.